Why should a regular person even care about the stock market? Isn't it only for the wealthy elite class? What most people don't know is the average American actually earns enough to invest in a portfolio that over several years will become a couple $1,000,000. Ever heard of a 401k or a Roth IRA? These are retirement accounts that almost everybody has, which invest your money in the stock market. But retiring a millionaire is a topic for a whole different video. Another reason we should all learn about the market is because it's empowering and cool when a person becomes articulate in something that most people think is out of their league. I know you want to be cool. Welcome to my channel. My name is Alex. I make videos to share a bunch of different concepts for financial success that unfortunately aren't taught to most people at home or in school. Today, I'm going to give you the best presentation you'll find anywhere on the internet, in school, or anywhere else on what the stock market is and how it works. Look at me, I'm in school literally right now. I've seen it all. At the end of this video, you'll be a pro. So let's get to it. To start off, it might be helpful to think that the stock market could also be called the equities market. Stock is another word for equity in a company, and equity just means ownership. Equity can be split up in a lot of small pieces and owned by a lot of different people. Equity, aka stock, is an idea that exists in all companies, not just the ones on the market. It's also sold publicly on the market and privately between people. I'm sure you've seen this before.
Today, I'm seeking a $100,000 investment in exchange for 10% equity in the Scrub Daddy business.
This is an example of somebody selling stock in their company privately. People sell stock in their companies to raise money for their business and just to become richer. The vocab can be a little confusing, so let's break it down. The word stock can actually mean a couple things. Like I've already mentioned, stock is the equity in a business and represents the collection of all of its shares. For example, I'm buying stock in Amazon today. People also use the word stock to describe a publicly traded company. For example, all my stocks rose today. Companies divide their stocks into pieces called shares. Shares are individual assets. Each one represents a small percentage of ownership in a company, and a company's stock is usually made up of several million shares. These shares are what's actually being traded between people. Think of a company's stock as an equity pie and a share as a tradable piece of pie. See, look, they're trading. When a little baby corporation is first formed, it also creates its total amount of shares that it's allowed to issue. These are called authorized shares. Outstanding shares are the portion of authorized shares that are issued out to people. Outstanding shares consist of two groups, the public float and restricted shares. Public float is what's available on the market, and restricted shares are issued to company insiders who have a time restriction on when they can sell them. This is important because when you find the value of a company, called the market cap or market capitalization, you calculate its share price times its number of outstanding shares. Companies do sell authorized shares on the market sometimes to raise more cash, and when they do that, it's called a secondary offering. They can also distribute more restricted shares whenever they want to. It's also not uncommon for companies to do a stock buyback to either invest in themselves or lower the supply of shares on the market. Corporations also hold on to their authorized shares to maintain ownership and control of themselves. This is all basically to say that an entire company isn't up for sale most of the time, and its market cap is only found by calculating its price times outstanding shares. Shareholders own a company, but it's not like they can treat company property as their own. They do have rights to a lot of things though. When a company distributes profits, called dividends, or distributes liquefied assets, shareholders will get their percent of it based on how many shares they own. Shareholders also have the power over the company with votes in shareholder meetings and the ability to appoint the board of directors, who's basically in charge of the entire corporation. This power also increases based on how many shares they own. Most people investing in stocks, though, don't really care about votes and aren't really that motivated by dividends like your finance classes will try to tell you. It's mainly just an investment in stocks appreciation. Basically, they just want to buy low and sell high. You know, this part. To make all this more simple and to understand how selling stock works, let's look at a story about a little entrepreneur named Vicky. Vicky, like a lot of kids, has been selling lemonade all summer. And let's be honest, most kids' lemonade is trash. But Vicky's lemonade brings in cash. Vicky actually blesses each cup of her lemonade with a secret ingredient called Florida water. One sip of this magic juice will change your life. People are going crazy over it. Chocolate! Business is so good that people all the way across her city heard about it and are telling her to set up a shop down there. And Vicky wants to expand her business, but she doesn't have enough cash to set up another stand across town. I guess Florida water is expensive. So what can she do? Well, at this point, Vicky owns 100% equity in her company, Sweet V's Lemonade. To make this simple for you sticklers out there, we're assuming that Sweet V Corporation has issued 100% of its authorized shares to Vicky in the very beginning. So what does Vicky do? She sells some of her stock to her mom, who's seen the hundreds of people lining up outside of their house and can tell this will be a good investment. Now Vicky got the cash to expand her business. This is an example of privately trading stock, and it's what you see being done on Shark Tank. With her mom's venture capital, Vicky's business starts growing, slowly expanding across the whole country. Right now, she can handle all of the demand, but that only lasts until drinking Sweet V's magic lemonade becomes a viral challenge. Let's roll a clip of one of these viral videos. What's up, guys? We're back with another video. Today we're gonna be doing the Sweet V's lemonade challenge. There's a warning label on this that says only take one sip a day, but we're gonna go ahead and drink the whole bottle and see what happens. Because I don't really believe in that spiritual magic shit anyway, so let's just see what happens. Let's go.
Oh my god. Oh my god, he on X Games mode.
Now the entire world knows about her product and wants to buy some. And Vicky wants to expand to meet the new global demand, but again, doesn't have enough cash to do it. So how can she get it? Well, she still owns most of the equity in her company and can sell some to raise funds. So she decides to sell some of her shares on the stock market, aka go public. Up until this point, Sweet V's Lemonade has been a private company. All her company's financial information has been secret, but she'll now have to report all of that information to the public. These financial reports for all public companies are available to everybody. If you look up Apple's 2019 10K form, in the financial data section, you'll see that their net sales were over $260 billion in 2019. But let's get back to Vicky. To put her shares on the market, she goes to a special investment bank called an underwriter. The underwriter's job is to evaluate her company's market value, calculate how many shares she should offer, and what price to offer the shares for initially. The biggest underwriters right now are Morgan Stanley, JP Morgan, and Goldman Sachs. These investment banks work directly with the stock exchanges to make Vicky's shares available to the public. Underwriting banks that also have a broker service like Goldman Sachs are the middlemen between both companies and exchanges and investors in exchanges. But what exactly is an exchange? First off, a stock exchange is not the same as the stock market. An exchange is its own business that participates in the market, serving as the place for buyers and sellers of shares to trade with each other. There are multiple exchanges, not just the one on Wall Street. The two major exchanges are the New York Stock Exchange and the NASDAQ Exchange, followed by 16 other smaller ones, each with different requirements for what is traded through them, including other financial securities that aren't stocks. A stock can only be traded through the exchanges that it's listed with, and it's extremely rare for a stock to be listed with more than one exchange. Here's how the top two exchanges are different. The New York Stock Exchange is the one on Wall Street that everybody knows, but it actually faces Broad Street. It's the biggest exchange in the world by far and has very strict requirements for the companies that it lists. These companies are generally the largest companies and the safest investments. The NASDAQ exchange is located in Times Square. It has much less strict requirements for the companies that it lists. It's known for listing new companies, high-tech companies, and high volatility companies. These differences are important because, like I said, exchanges are their own companies, and these two are publicly traded on the market as well. You can invest in both of these exchanges if you want to bet on the performance of all the companies that they list. When all of the 18 American exchanges are combined, that's when you get the overall US market. When you combine all the exchanges across the world, you get the global stock market. And if you want to invest in these markets, you will have to go through a certified broker or electronic brokerage like Robinhood or Fidelity. Now we've covered what the stock market is, but when people say the words the stock market or the market, they're talking about something more specific than the combination of all the US exchanges and the stocks they list. Here's an example.
A day for the history books. The stock market on a rocket ride, blasting through a ceiling and closing at an all-time high.
Did you catch what was on the screen at the end? When people on TV say, the market is at all-time highs, they're referring to the price of a major index fund. The three major indexes are the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite. To understand what these are, let's look at the S&P 500 index, ticker symbol SPY. The S&P is a fund that is invested in about 500 different stocks spanning across all 11 financial sectors. It invests in the strongest companies in each sector to give investors a reliable look at how the entire US stock market is performing. It's not only a tool to track performance though, it's also a fund that you can invest in if you want to bet on the overall US market. The S&P returns beat 92.3% of the world's richest hedge funds, and it pays dividends. Let's get back to Vicky's story. We left off with her getting ready to sell some stock on the market. The first day Vicky's green slice of stock becomes available on the market is called her IPO, Initial Public Offering. Investors around the world are waiting for the opening bell to ring so they can buy up all the stock that she's selling. The underwriter valued Sweet V's lemonade at $4 billion, listing 10 million shares of her company with the price of $100 per share, or $1 billion in public float. When investors buy up all the shares, little Vicky's bank account goes from $0 to $1 billion in a few seconds. Vicky is only offering 25% of her company. When all those shares are bought up, the price per share will rise as eager buyers bid up the price like an auction. This raises the value of the entire company's stock. As the price per share goes from $100 to $200, the remaining stock Vicky still owns becomes worth $4 billion. At this point, Vicky hires a CEO to run her company. She remains a chairwoman of the company and goes to retire in Bali, Indonesia. Not bad for a little kid in a newspaper boy cap. But we can't forget about Mom. Mom's early investment has now raised her net worth to $2 billion. All 40 million shares are outstanding shares, but only 10 million are public float. Those 10 million are left being traded between investors on the market. But remember, Vicky can buy back those shares or offer more shares at any time. Okay, so we've gone deep into how everything works, but let's summarize the main ideas. Shares are being traded between investors on the market. One share is usually, emphasis on usually, between $1 and $2,000. One stock is usually made up of several million shares. One exchange lists a couple thousand stocks. One brokerage gives you access to trade within dozens of exchanges, and all it takes is one computer to access the dozens of brokerages that are out there. So I want to end all my videos with good quotes that I call gems. You know I'm Chinese, so today's gem gotta be an old Chinese proverb. The proverb says, "Don't be afraid of growing slowly. Only be afraid of standing still." See, sometimes we need to be reminded that we're not stuck with the label or box that we've been put in. We can go out and learn all things, not just the lessons that were given to us. So with that, I appreciate y'all making it all the way through, and any type of support that you want to give me with a subscribe or a like or comment, or sharing it with anybody. You know, I'm just out here trying to make sure everybody eats.